A lot of one question that you guys have been asking me a lot is what settings do I have for these colored sessions, and how do I use them with the highs and lows of days. So I'm explaining in detail my settings that I have and how I draw the highs and lows of days. If you guys have been seeing my previous videos, you might already know how I draw the highs and lows of days, but I'm gonna still drop some value for you and give you the settings for these colored based sessions. So you guys are going to see how having the sessions with these times, and how having the highs and lows of days marked, how I'm going to tell you right now how accurate it's going to be, and I know you're going to be able to improve your trading using this. So first things first, let me just explain which color goes with each session. So the yellow is Frankfurt, which is like a think about it like a pre-London, and then the orange is London, then the baby blue is going to be pre-New York, and then the pink is New York, and then we have Asia, which is green. This that you see is I just have New York at a different color from 9 to 10, because I've noticed that like at 10 sometimes we'll have like a reversal, so I just have that marked there to highlight, to remind me that at 10 sometimes we'll have a reversal, but this is just one session. So let me give you guys the settings and the name for this. It's an indicator, but it's not really an indicator. Like, it just lets us know that we're in this session, like we have it marked. It's a lot cleaner. So this is called, you guys are going to want to take a screenshot of this. This is called CM time based lines. That's what you're going to look up here. When you click indicators, you're going to type that up here, and it's going to come up like this: CM time based lines by Chris Moody. And these are the settings. So what's it called? Here you go. We're going to have these settings right here. Just take a picture, and then you're going to input these, and then make sure you have these are the colors that I have. You don't have to put the exact same color as me, but these are the colors that I have. It might be easier if you use them the same. And then the opacity is at 30%. That's the, like, how bright you want the color, like the thickness. And then the last setting is going to be this setting right here. You're not going to have to change any of these. All these are going to be the same settings when you click it. The only thing you're going to really have to input is this right here, these here, and the opacity, like I told you guys, this right here. So now that we got that down, let's oh crap. All right, let's take that out. So let me teach you guys how to, the rules, and how specifically how to draw the highs and lows of days. So real quick, let me show you guys this. So let me show you guys how the high and low of days should be marked. The high and low of days should be marked. These are the key rules. Highest and lowest point must be between Frankfurt through New York session. What does that mean? That means that it has to be a session between Frankfurt through New York, and it cannot be Asia session. Asia session does not count. So the second rule, must be a session, not in between sessions. Excuse me. So this means that it has to be a point in a session. So we're already talking about Frankfurt through New York. So we already know it has to be one of these sessions. And then the second rule, must come from a session, not in between sessions. So it cannot be a point in between the sessions right here. This is not valid. If there was a point here, that would not be the high of the day. It has to be in these sessions right here. So Frankfurt through New York, and then in an actual session, not in between sessions. Those are the two key rules. And then now I'm gonna go in detail and explain a little bit more rules, but these are the main rules right here. It has to be the highest and lowest point between these sessions, not in between the sessions. So now we got that clear. Let's go to where we were at. Let's go back to this. So another key rule for this, for marking the highs and lows of days, is to do it on M5 time frame. M5 time frame is the most efficient time frame that I've noticed. It's maybe that's not the right word. It's the most precise time frame. That's a better word said. I don't know why I said efficient, meaning that you could see, if we go to like M15 for example, or like for example on M15, or we're to just say the hourly. Some people do them on a higher time frame. Like you mark this here, but if you go to M5, you're gonna see what I'm talking about. We mark that here, but if we go to M5, you're gonna see. Notice how we clean it up. We're gonna mark it like this, like that. So M5, just keep that in mind. Most precise time frame, and then make sure you actually, like, sometimes you might have to actually zoom in like this. Oh crap, not like that. That's very extreme. Zoom in like this just to make sure you're actually getting the point. For example, you don't want the like this. You want to be very precise and actually get the lowest actual point. So M5 time frame. So now let's go into the other two rules. So the other two rules are very simple. Let me show you guys this and explain it for you guys. So let me actually like draw them with you guys as well. So my chart is pretty much empty right now, and I'm gonna draw them with you guys so you guys can understand. So pretty much I'm gonna be trading tomorrow, which is gonna be February 28th on Tuesday. The high and low of day, if we're trading on the 28th, it has to be coming from the 27th, which is one previous trading day. Meaning if we're trading on Tuesday, it has to be one previous trading day before. So it's going to be the highest and lowest point coming from Monday. So it's going to be this point right here, this lowest point right here, low of day. And then the highest point, this point right here, high of day. And what do I mean by one previous trading day? So I'm gonna explain that right now. High of day right here. So we're marking this for tomorrow. We're gonna be trading Tuesday, so the high and low of day is gonna be coming from Monday. And the previous high and previous low of day is two previous trading days before. So if we're trading on Tuesday, it's gonna be coming from Friday. It's not gonna come from Sunday because the market was closed. It's two previous trading days. So we're trading on the 28th. It's gonna be coming from the 24th because that was the last trading day. So two previous trading days, and it's the same thing, same concept, the highest and lowest point between Frankfurt session and New York session. So here we go with the previous low of day right here, and keep in mind M5 time frame, how I told you guys. And these points are very specific. You're going to see, I'm gonna just probably point a few examples out, but you guys are going to see how specific these points are. A lot of times the market will draw like a very valid supply or demand in between these zones or right above it, and then that's when the movement will come in. You guys will see that if you back test this. So this is the previous high of day right here. Let me just see how long this video is right now. Okay, perfect. So let's look, if literally just withdrawing this real quick, you guys can see how this was the previous low of day coming from Friday, and then notice how Monday pretty much price took off from this area. You can literally see that price literally pulled back as soon as the market opened to this previous low of day right here, and then created the low of day right below it, and then that's where the movement came in. I mean, honestly, I don't take crazy entries like this, but just to show you guys, or actually let's just do this better, just to show you guys how much price pulled back after it touched this area. Nothing crazy, literally 3 pips. So you would have got in there with an 8 pip stop loss, you would have been more than good. But that's just a crazy entry, but I'm just giving you an example. A more precise entry would have been, for example, if price would have pulled back like right here in this area of demand. This is what I mean by example. A lot of times you're going to see this like this. You see how this is a valid demand zone right here? Just price didn't pull back into it right here. But this is a valid zone because we have a demand zone, the previous low of day above. And for example, if price would have pulled back right here, this would have been the perfect entry. So you're going to see that a lot of times. I'm going to just point out some examples and you'll see. Let me zoom back and I'll point some examples for you guys. So let's just draw the high and low of day here, for example. Let's just do this. For example, right here, this low of day right here. I just want you guys to see some rough examples, and you'll notice. This is a perfect example, actually. Notice this right here. Previous low of day. Oh, and we go deleting as we go. So we only have previous low of day and high of day. So keep in mind, when you're drawing your new high of day and new previous low of day, you delete your previous low of day and you mark your new I'll show you guys better said because I'm gonna confuse the crap out of you guys. So I just want to point out this quick example. Notice how this previous low of day right in confluence with this supply zone right here. I think we actually called this sell right here, and I took this sell, but I just want to point this out as a rough example. Notice right here, this supply zone in confluence with this previous low of day, price used it in London, and then price, you can see that pulls back right here during pre-New York, and then creates this new supply, and then I took the sell somewhere here. If you guys follow me on Instagram, you guys know I posted this, and I actually posted this breakdown in a previous video in the YouTube channel. So this is what I mean. A lot of times if you mark them correctly, you're going to see how the true supply or demand zone is going to be used in confluence with the high and low of day. So let me actually explain what I was talking about now, so not to not confuse you guys. So for example, this, let's just delete everything, move through drawings. So for example, this is what I meant. When I was trading today, this was my low of day right here, coming from Friday because I was trading on Monday. So this was the low of day. But now that we're going to be trading on Tuesday, this is no longer the low of day. This becomes the previous low of day. And then this becomes the low of day right here, like I just showed you guys. And then on the 29th, when we're trading, which is going to be on Wednesday, then we're going to delete this, and price from here becomes the previous low of day. So that's what we go. We start deleting and adding every day as we go. So hopefully you guys enjoyed this video, and I'll see you guys on the next one.